Frank, what do you think about that oil idea? I was trying to say that. Did you hear what I was saying about oil?
Bearish oil.
Possibly.
Yeah, I agree too. Because not only on retail, sentiment is so strongly bullish, but this week was a strong bearish change for smart money. So obviously, price is not listening to retail because it's been going down the past couple of weeks now. So what it's looking like now is we're going to see some pullback into a further downtrend on, well, I'm on the daily chart. So if we look at 79 to 80 or 81, that sort of resistance level, just on a technical scale, I think that's a pretty good bearish setup there. Although I'm not really looking at oil right now. I have my eye on gold, actually to the downside. If you look at, I have no idea what I just did there, but yeah, I just I guess I zoomed in way too far. I don't know how I did that, but head and shoulders pattern here, and then we broke under the support zone. It looks like probably, I know this is the 1930s, you just can't see it on the screen, but this is what I've been looking at before. This level right here, 1930s, and then we get to lower support, which is quite a ways down. So I'm thinking gold is probably going to be in some kind of downtrend for a while, but that's just me.
Yeah, it definitely looks like the price action is struggling right now. I think if you look at what we were saying earlier, I think at the very least, 38.2 is down to like 1933. There's some support over here. And I really don't, you do have kind of where we're currently sitting some support, but I think when you get the fib in there, that's that 38.2% retracement hasn't been retested. And I think there's probably a good chance price does want to come down a little bit lower to retest that area. And I was mentioning that if we start to get a breakout to the upside, I might be interested in that, but I'm not really interested in buying it where it currently sits. I think we have a little bit more squeeze to the downside in the meantime. Price action looking pretty weak on the 4-hour chart. You got these lower highs, and we broke through support, and that head and shoulders pattern, as you mentioned. I think we definitely, from a price action standpoint, gold looks bearish in the short term. So we'll keep a close eye on that. What else are you looking at, Frank? I know we were talking about this earlier this morning, but we're both barely hanging on to our S&P longs, right?
That's right. Yeah. Barely missed, I guess, our stop loss. So overall, not looking extremely promising, but the fact that it's holding above where we thought would be a breaking point is kind of, I would say, a good sign. Yesterday's candle was pretty bearish, though. On the daily chart, we saw some exhaustion on Wednesday, potential bearish reversal yesterday, and then today is kind of in the middle. We'll see where it wants to run to today, but if it pulls all the way back and comes to where it opened at 6 p.m. yesterday, that's kind of an indication. Okay, well, maybe we're going to go a little lower.
Did you know our market scanning software, the Edge Finder, just got even better? Check out our newest asset, Bitcoin. That's right, Bitcoin was our most requested feature update, and we're so excited to announce Bitcoin is finally here with plans to add even more crypto in the future. We've also updated our most popular feature, the Smart Money Tracker, adding even more data than before. The Edge Finder not only automatically scores 8 different metrics for each asset to give it an overall buy, sell, or neutral score, but it also keeps track of bank and analyst positioning, stores historical fundamental data, shows how assets are trending throughout the day, and so much more. Right now, our YouTube viewers can get the Edge Finder at a discounted price when they use promo code A1YT. You can check out the Edge Finder with the link down in the description below, and again, get it for the special discounted price when you use promo code A1YT at checkout.
Yeah, no, that's I think that you've had a really, really good run here. You're looking at the S&P 1, 2, 3, 4, 5, 6, 7 days in a row, almost 8 days in a row of bullishness. And so it's probably due for a little bit of a pullback. we have our stop. And by the way, guys, for if you weren't here, Frank and I both took this trade. But the crazy thing is that we both took the trade without even discussing it with each other, and our trades were the exact same idea. It was crazy. We entered like right around the same point. Our stops were in the same spot, and then I trailed it, and Frank was like, "I trailed it," and I was like, "Where did you trail it to?" And then we both trailed it to the same spot. So it's kind of cool when that happens, because it's like, we're thinking very much alike. We have similar trading styles, and I mentioned with Kenzo earlier, we had the same markups as well. It's just when you do this stuff long enough, I guess a lot of the chart analysis and things like that ends up looking pretty similar, which I think is good, right? If you're kind of thinking the same way that a lot of other people who have some experience in this are thinking, it could be pretty good. I think to follow up on that concept that you pointed out with the S&P, yesterday's candle was horrendous, right? Not looking very promising, arguably kind of a bearish engulfing looking kind of candle. But remember, still, when you get like a bullish or bearish engulfing candle, but it's in an upward trend or downward trend, like it's going against the trend, you got to take it with a grain of salt. We've had a really explosive move to the upside. And I think you may, again, we've got our support level marked out here. So if price breaks this support, then the trade's done. We'll take profits. And Frank and I both have our stops locked in profit. So it's a nice situation in that regard. And if price does find its way to break through these highs, then the story continues. I think one thing that is beautiful about trailing stops is that you yield a little bit of the the responsibility or the decision making, the predictability. You yield some of it with trailing stops. You say, look, I like this market. I think it's bullish, either fundamentally or technically or whatever. And I'm willing to stay in this market and let it decide what it wants to do. It's more hands off than trying to, pick a take profit, pick a stop loss, and all of those things are hard. And so for me, it takes one less thing, and it says, okay, we're gonna stay bullish if this market stays bullish, and we're gonna get out for a profit if that happens too. So, of course, trailing stops have their pros and cons. Like every strategy, there are times where you trail it, get stopped out, and then it moves on without you. So, that comes with the caveat at all, as always. But I like the idea of trying to stay in the S&P. If we can break through this high, that would be great.
Well, that trend line is holding up pretty well.
Yeah, it
so
seems
it's not
like
just
it.
that support zone. Yeah, go ahead.
No, you're right. I was gonna get to that point exactly like you said. You've got this upward trend that seems to be intact. You've got a support level that's held, 1, 2, 3, now 4 potentially times, and it looks like it's holding it together. And as you mentioned, you got that nice lineup between the trend line as well as support zone, and some of the many fundamental factors that we've discussed over the past several streams. But will be interesting to see if we can get that breakout. I'm happy to hold it over the weekend. Frank, would you close out before the weekend and reopen, or would you just hold through?
No, I just hold through.
Fair enough.
Yeah, if it depends on the entry, I guess. The fact that we got it, I bought in at on October 31st, so I've been in it for quite a while, and price has gone up pretty well since then. So I don't really want to sacrifice my entry for a little bit larger of a swap payment when we still have the potential of way more upside on the S&P, looking at just the daily chart and that trend line overall. So if I was in one today or yesterday and I'm just hovering around wherever, I would probably just not stay in. But because of where we are right now, I'm just gonna hold it, see what happens. And if we see otherwise, then I'll probably either trail out or take my own stop manually.
That's a good point. And again, when you have that risk-free trade, and it's no longer a question of like if you're going to make money, but just how much are you going to be able to make and trail on this, it makes a big difference. And also, the idea of getting in and getting out of a trade, I think going off that theme that we were just talking about with like, remove some of the extra difficulties of trading, the extra decisions you have to make. You just holding a trade through the weekend and trying to do that, or doing that instead of like getting out, getting back in, adding those layers to trading. Those little things do add up. There's spreads and commissions that you have to pay when you do that sort of thing. There's little extra variables. So keeping it really simple and just being at peace with, if this thing trails me out, we're out for a profit, and if this thing pops higher, then great. So yeah, definitely just kind of trying to stay low maintenance with these trades.
There is a chance that they can increase the rates because the inflation is still a bit higher, and that was not really good. We saw some reversals on the dollar. Because if you still remember, the market was actually pushing a bit lower a few days ago. So now it seems like it's pushing up again. So the question is, will maybe the market on this DXY, because it's the dollar, will it break where actually the first breakout, you can see the market broke out here. So if maybe the market breaks out of that, we can say yes, maybe the market or the dollar is going to continue pushing up. Another thing is, next week we have retail sales and also CPI. So those that are going to be actually very good. But for now, we can just focus on the market now. So now I've been actually watching DXY, but not actually trading it, but I was trading actually Euro USD, GBP USD, and US30 and the Nasdaq. So if I go maybe on gold, for me the structure is not really good. I think I can't actually jump on the market. This reversal is aggressive. It seems like actually the dollar is getting back to its strength again, and if maybe we break this level, it's where I can say now it's time for me to look for that side, and it seems like it's breaking that actually, so that I can now get involved actually on gold. So on other ones like GBP USD and Euro USD, if you checked last week, actually on Euro USD we had a breakout. The market was actually going down very nice. Then after NFP we saw the market actually breaking out. So the question is, will the market continue pushing up as Powell is still actually thinking about increasing the rates? We have to see that, but the structures are very nice. I think maybe if maybe the market respect this breakout, we might see the market pushing up. If not, it means the dollar will be going back to its strength, and we will see another continuation of a downtrend, or actually dollar getting gaining that momentum again.
Yeah, I think I'm glad that you brought those up, Kenzo, because the euro has been exceptionally interesting to me from that daily chart perspective. You had a very clear, and I gotta say, Kenzo, it's crazy how similar our charts are. Every week we pull up, like, it's like we haven't talked since last week, and then boom, you come on, it's like we have the same charts. It's very cool like that. Just, I guess, years of experience and doing it together.
Yes, because
for the last several months.
I can see your downtrend there, and I can see the breakout. That's great. That's great, actually. I think actually once you start to learn the way you approach the market, even if we don't really approach the market in the same way, we are going to get mostly the same results or the same entries and stuff like that, and which is fascinating because we don't really trade the same, but at the end of the day we have the same results.
Yeah, and we have times where our fundamentals are slightly different, but generally speaking, we're kind of following the same story. I know we both focus very heavily on that US economic data, news, and things like that. And again, as I mentioned earlier, for those of you guys who heard me say that we have CPI is coming out. Let's see when we can get this on the screen. So next week we have CPI coming out on Tuesday. So Tuesday we are expecting, at least let me zoom in for everybody. CPI, we are expecting here a reading of 3.3% year over year. And core, we're expecting it month over month to be 0.3%. Now, the previous CPI reading was 3.7. So the market here is expecting to see a pretty good continuation of that disinflation trend. Now, for viewers who may be newer to the fundamentals, then first of all, I would just like to say, make sure that you are subscribed to this YouTube channel that you're currently watching, but also you should be subscribed to people like Kenzo, because we try and bring that fundamental insight to you each day, each stream, that sort of thing. So make sure to do yourself a favor. That's totally free to do. That's free game, free knowledge. But in terms of the CPI, what I mean by this, inflation is expected to come down based on all of the work that the Fed has been doing, right? They've been tightening their monetary policy, rate hikes, reducing their balance sheet. All of these things are expected to help on the inflation story. Now, if that help does come to the inflation story, it's going to weaken the dollar, because fear about rate hikes and recession and all that sort of stuff could kind of slowly go away. And so that is the sort of dollar bearish camp. However, again, if we get a hotter than expected CPI, the dollar is likely to be very, very strong. And so I guess, Kenzo, as you mentioned, the majors, when you take a look at the Euro USD, they're sitting at what I would say is a pretty good area of support. The Euro dollar pulling back into this area right around 1.067. But perhaps there's a little bit of consolidation occurring, because the market is saying, well, we've got CPI on Tuesday. So I guess game plan for you on Tuesday, we get that number for the majors, for indices. I guess, what will you focus on most on that day?
Yeah, actually, on my side, if maybe we can try to forget about Powell. He said maybe the inflation is still very high, we might increase the rates here and there, but that was just a statement. So mostly the markets will react for that, maybe 8 hours or that, but it's not actually the real numbers. So, but by the looks, I think we might actually see a reversal. I think on the analyst there, the forecast or the estimate, they are pointing that CPI might actually go down. And I think it might actually go down, because if you check maybe gold, you check NASDAQ, all these major pairs, they are all sitting around the support or maybe around the resistance. It's like they are ready to push. If you go maybe on GBP or Euro USD, they are consolidating, and I don't think after today we're gonna see any major move. We don't really have a major economic news, so the market might push to the upside. If we go maybe now on GBP USD, you will also see that, let's see, we had a breakout. Okay, this one is actually coming back again on that retest. If you checked last week, the market was actually going up. Now, just because the dollar is a bit stronger, I think we might have maybe a reversal and the market might push up. And it's not actually a coincidence that all these markets, they are playing around the resistance. If we go maybe on US 30, you can see that the market is playing around the resistance. And it's just a matter of time before the market close. If the market close around these levels, by Monday, I don't really see the market moving that much, and that will give a CPI a chance to do its thing. And if maybe CPI is gonna be positive, I don't know. Maybe we might see maybe a nice breakout. If maybe a CPI is gonna go lower, if it's gonna go up, it's a different story. It means this downtrend is gonna continue. But I believe that we might see a weak CPI.
It's been interesting in terms of, you've got the US 30, which is of course the Dow Jones, pulled up, Kenzo. And when you look at the relative performance, obviously the Dow Jones has had a really big jump in what you're seeing there, but it's actually quite small in gains compared to the NASDAQ, which the NASDAQ has just been so dominant. So it's interesting that if you were too short an index, would the Dow Jones be your pick? Like, would that be the one? And maybe why would that be? So if in terms of a short position, clearly we're sitting at a resistance point. And I think that, when you take a look at NASDAQ, I find this one to be a little bit scarier to short. You've had this nice breakout, and again, relatively stronger performance than the other two. So if you were to short one, would it be the Dow?
I think Nasdaq actually is too sensitive to interest rates or maybe retail sales. I was going to go maybe with Nasdaq, but it's been not performing very well about going down. But as long as the market allows me to do that, I think we are actually playing around this resistance. We have this diagonal resistance, but another way we have another horizontal one. Unless if the market breaks out, then I will think about maybe buying, because it's also a good thing. The market has been going down for quite some time, so we might look for a buy. But if the market is struggling to break out of this area, then I will actually push lower. That's why I also have a sell pending order ready. So if maybe the market breaks out, then I will be thinking about buying.
Don't forget to check out the links in the description if you want our broker recommendation, access to our free Discord, free Edge Finder, or want to chat with us on Telegram. Remember, you can watch us live in the markets every morning starting at 9:30 a.m. Eastern Time, and we have lots more free trading tools and content available on our website, a1trading.com. Thanks for watching.